Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 21st of July 2021, and we're publishing our regular morning update where we look at the latest news headlines, economic reports, and precious metal prices. Today we see that equity markets are recovering and gold and silver price falls halted. But for how long? Let's take a look. Welcome this bright, sunny, and extremely hot Wednesday morning. It's 8:30 a.m. GMT +1, so we're very early compared to usual. I have a meeting to go to at 10:15, so I have to get this out before I disappear. News headlines. Credit Suisse exodus in full swing as more senior bankers leave. Apparently, this Swiss-based bank operates a toxic working environment, or that's what some of the staff have accused it of, and it's losing many senior members. Bitcoin extends gain after retaking closely watched $30,000 mark. Yes, as we mentioned yesterday and the day before, Bitcoin fell below $30,000, but it's now back up. Not quite, but nearly touching 31,000. ECB set to rewrite stimulus pledge after raising inflation goal. Let's take a quick look at that because that's perhaps the most pertinent to what we're interested in. The European Central Bank starts a potentially heated two-day meeting on Wednesday, with officials needing to decide how their newly unveiled monetary strategy affects near-term policy. After raising their inflation goal to 2%, for those who listened to our earlier videos, we mentioned this, I think, not just on the weekly update, but during the previous week. After raising their inflation goal to 2% earlier this month and pledging to be forceful or persistent to hit it, the challenge for policymakers is to make clear what such an approach means for interest rates and bond buying. Disagreements immediately surfaced when drafts of potential wording were circulated. President Christine Lagarde heightened the anticipation by promising interest rate variations and changes to Thursday's policy announcement and her press conference. She also acknowledged that the unanimity she achieved in the strategy review when it concluded this month will be hard to replicate. Forward guidance, the language central banks use to describe the future policy path, has become an important tool in times of uncertainty. The aim is to prevent unwelcome market speculation that increases volatility and undermines the economy. And what that means is, if the bank lays out basically the path which it intends to follow, then markets do not have to try and guess what the bank is going to do. And what that does is it allays to some degree the fears that, let's be blunt, investors and analysts sometimes conjure up, usually far worse fears than the reality, and the bank wishes to allay those fears. The dilemma, of course, is if you know exactly what the bank is going to do, then the potential for market manipulation exists. It's a double-edged sword. While investors don't expect the ECB to change either interest rates or the two main asset purchase programs immediately, they are seeking insight into how the measures, their duration and intensity could shift as the pandemic crisis ebbs. Now, I won't read much more of this, but just very quickly, the central bank facing a recovery-driven spike in inflation that it insists masks underlying weakness must convince investors and the public that it'll neither tighten policy too soon and stymie the recovery, nor let price growth spiral out of control. And this is interesting for those in America who can compare what's happening in Europe. Interest rates at record lows with a deposit rate at minus 0.5% were confirmed in the strategy review as the ECB's primary tool, and guidance on them is closely linked to progress on inflation. While it will definitely change to reflect the new goal, some economists are looking for more precise signals of persistence. Many listeners to our channel will remember that when Europe went into negative interest rate territory, there were a number of talking heads in the United States saying, we're going to have negative rates in the United States. And we stated, whilst that was a possibility, we'd firmly believed, that would be an absolute last resort. They would rather move to other QE measures than introducing negative rates, because negative rates poses a number of systemic problems that increasing other forms of QE don't. Now, it's too technical to go into here, but we were derided at the time saying we didn't know what we were talking about. Well, you haven't got negative rates in the US. Now, admittedly, the Fed funds rate is 0% to 0.5%, so we fully admit it's not really positive rates per se, but sometimes it's important to listen to people who do know what they're talking about. And we say that without boasting, but with 40 years of financial services experience, whereas a lot of pundits with agendas, usually to sell something, will tell you otherwise. Does that mean there will never be negative rates? No, we can't say that. But what we do know is that as far as central banks are concerned, and particularly the central bank of, i.e. the Fed, negative rates will be one of the very, very last options it would ever consider. And now, of course, we're in an environment where we're speaking about raising rates sooner rather than later. Whether that happens remains to be seen. If the COVID pandemic expands to the extent that people fear, then raising rates further is not going to be an option, because the economy will struggle even at the current level. BBC News, we're going straight to the American version, only because in the UK it's more about heat waves and COVID. Jeff Bezos launches to space aboard rocket ship. Top Trump aide accused of working as a foreign agent. And the bit that perhaps we'll look at, JP Morgan boss set to net millions from award. And what this basically says is banking giant JP Morgan Chase gave its chief executive a special award potentially worth millions of dollars. The company said the award was to persuade Jamie Dimon to lead it for a significant number of years more. The 1.5 million stock appreciation rights, which are like options, will allow him to take a profit if the firm's share price rises. Mr. Dimon is the only sitting boss of a major Wall Street bank who saw it through the 2008 financial crisis. So it's basically saying he's got experience, and I wonder if they're fearful that there might be another one around the corner. What we do find quite interesting is Mr. Dimon became chief executive of JP Morgan Chase at the end of 2005 and was also named chairman a year later. He was paid $31.5 million in 2020. And according to Forbes, has an estimated net worth of $1.8 billion. Nice if you can get it, is all that we're going to say. Okay, let's take a look at what's happening financially. The dollar index up. It's now breached that 93 level, as we predicted it would, 93.14. Looking at oil prices, down $0.25. 66.94 for WTI crude and 69.09 for Brent crude. Stocks, well, the stock market yesterday in the US were up, not quite achieving the losses that it had made the day before, but pretty darn close, up broadly just over 1.5%. European markets this morning, it is quite early, but European markets this morning all up around 0.5%, or broadly up 0.5%. And overnight, the Asian Pacific markets also up broadly just over 0.5%. In terms of economic news, there isn't any today as far as the US is concerned. However, on Monday we had the NAHB Home Builders Index, which came in at 80. The forecast was really 81. So a disappointing figure. Equally disappointing, building permits for June coming in at 1.60 million. Compared with an expectation of 1.68. but housing starts were higher than the previous month and higher than expectations at 1.64 million. So broadly speaking, it's too early to tell, quite frankly. We have a number of policymakers around the world making announcements today and tomorrow, which we shall cover. But basically, as far as US economic data is concerned, the important parts are tomorrow, where we have the weekly jobless claims, and the index of leading economic indicators will give a good insight. And then on Friday, we have market manufacturing PMI and services PMI. Looking at our recent videos, we mentioned market crashing. I think we pointed out we didn't think it would be a crash, but it was down 2% and would recover, and it has, quite frankly, so far. We'll see if that was just the start of continuing falls, and also why lockdown easing could be both good and bad for silver. That's it for now. We're off to our meeting very shortly. Thank you for listening. Please give us a thumbs up. If you haven't done so, do subscribe. And of course, press that very important bell sign. Have a great day, everyone. Until tomorrow. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.